Welcome everyone to season 2, episode 1 of Aveco Economic Forum. We had the wonderful first season covering so many aspects of the business in the finance sector, and this time we are starting our second season with the startup sector. Such an enthusiastic time for startups, and they're coming up with so many IPOs. So that is exactly what we're trying to understand in this forum. Why is it raining IPOs, and why are startups enthusiastic towards it? We have two very excellent speakers with us today. Our first speaker is Mr. Mikhail here. He is a business and finance writer and researcher and has been a part of our forums before. And our second speaker is Mr. Varad. He is the co-founder of Aveco Economic Forum and he's currently pursuing his start accountancy. He's in his CA finals right now. And we are looking forward to a wonderful discussion here. Welcome, guys. So, all right. So, the first question I would like to direct towards Mikhail, right? So, we saw the current news buzzed around, startups such as Byju's. They're not only acquiring many companies, smaller companies in their own sector, they're also gaining so many funds from venture capitalist firms and from various investors, top companies. And some people are thinking, they're just opening their arms to as many fundings as possible, but they fail to understand it's a very planned aspect of funding, right? So before we deep dive into what exactly are, why exactly IPOs are getting launched here, could you help us guide through the various stages of funding and how a startup goes through it?
So there are a couple of things that startups go through. The one that we hear the most is seed funding. That's basically the first step. So investors are sowing the seeds for like the tree of innovation to shoot up into the sky, and they bring it in exchange for some equity. So this money that startups get from investors, they'd be used in understanding stuff like, is there a proof of concept? Can I facilitate some market research? Can I develop my products and services? So those seeds of capital essentially are used for startups. So those are the questions you want to ask, like what is my optimal product and who's my target audience? So at around this stage, we have someone called angel investors who they come in and because the venture is more riskier, so they are called angel investors. They come at this round, they start investing, and because when the venture is quite still new, it's quite fledgling. So and even sometimes when it's too risky, you have something called crowdfunding, where you have people come in and invest. But as per a session I had with an angel investor, I learned that it's frowned upon in India, but I hope one day it's feasible in India. Then next one is called Series A. So your startup has become a little bit more established now. So your priority now is how can I scale up? How can I accrue a long-term profit? So you want something that's sustainable in the long run and something that makes money. So that's the criteria for Series A. So around after Series A, your startups are expected to have like a robust consumer base or a robust user base. So after that is Series B. So now you have your metrics like consumer base, as I mentioned, long-term sustainability and other things like that. So you need your funding to expand all that. You have to acquire talent for different roles. People who can take your growth to the next level. So developing a business, people who can sell, people who can market, people who can advertise. So they come here. And then you have Series C. So if by chance you do happen to come to Series C, you're no longer considered a startup. You're considered like a proper company. So here you try to expand. You try to reinforce your R&D, your research and development. You try to acquire companies, which is what Byju's kind of did in Series C. I think that was 5 years ago in 2016. So that's when they started doing that. So it's no longer venture capitalists or angel investors who are injecting capital. You also have bigger financial institutions like investment banks. So they're joining the party. And you also have Series D, E, and so on and so forth. As you go, you need more money and all. And then, of course, amongst all of this, you have IPOs, which are initial public offerings. So your companies issuing shares to the public. They want more access to funds. They want to clear their debts. They want to pay for their more expenses. They want to grow more. So that's where there's an offer for sale. So investors, they dilute their stock, they dilute their stake, and they sell some more shares. So there are various stages of funding that go beyond these also, but these are the more rudimentary stages of funding that people know.
It was wonderfully explained. You gave the entire hierarchy, so from where they start and what kind of funding they need. That's perfect. And yes, that is not an easy process at all, even for the companies to decide. So the next question I'd like to direct towards Bharat. Now, Varad, people have considered startups to be, different form of company. Initially there used to be a joint stock company, a private limited company, but then there is something called startups here, which is, kind of mixed in the arena. People don't really understand if it's privately held or publicly held. So is it true that startups can, popularize themselves faster and launch an IPO at a much larger scale due to the backed up funds from different companies and from different investors.
Yes. So Akash, addressing your question, I would like to draw the viewers' attention to the facts that currently going into the economy. Recently, we have seen the amendments which have come to the Finance Act and the Companies Act, and we can clearly see that government is themselves trying to encourage the startups. In recent amendments to the Companies Act in 2016, we have seen that the government has separately categorized startups and has significantly reduced the compliance work that the other companies have to do. So, referring to the question, I would say it has become not easier for the companies to form themselves as startups, but I would say that startups have become a new form of business, or I would say they have been a part which have boosted the India's economy in so many aspects. So referring to that, since I'm currently working in a environment which is much more into compliance and advisory, I can say that startups have become another kind of form of entities. Referring to some more aspects of the Income Tax Act of India, I can say that there have been a lot of deductions which these startup companies have been getting in terms of Section 115, which is basically a reduced rate of taxation, you can say, or you can say something about the tax holidays which startups are currently getting in India. So I can say that the culture which is now evolving in India is very good for Indian economy, as well as I can say that the current rise of markets and the fund flow in the Indian economy through the uh, slashed, or I can say the kind of interest rates we are having globally currently. The money is in abundance. The startups are in need of these abundance of money, and the investors' confidence that we have seen currently in the economy is fantastic. So I can say the startup culture is growing, and it will continue to grow at least till the end of this quarter 4 of the FY22. This is the assumption of many investment banks, any some more venture capitalists like Sequoia. Then we can see so many funds being flowing from BlackRock, Merrill Lynch, and so many foreign investment banks. So it's a good sign for India's economy as well. One more thing I would like to add here: a very recent amendment on the September end, 30th September, NFRA, that is National Financial Reporting Authority, has issued a consultation paper also saying that startup companies, including the companies which have paid up capital or say turnover below 20 crores or 10 crores, need not compulsorily conduct an audit. Now that might sound very exceptional, because if the company doesn't conduct an audit, there might be the chances of misrepresentation, frauds. But the kind of support the small businesses is getting from government is exceptional. And I would say when I recently came across an audit of a medium cap company, I saw that the Companies Act have made the requirement to disclose the number of like the amount of payable to MSME sector. So basically, investor should know that if an entity, where how much ever big it might be, it should not default any of its dues to MSME sector. So that's the kind of support the government is giving in recent times. And
that is right. Wonderful facts presented by you. Thank you so much for those. And yes, just moving on to the fact that even during the pandemic, the government had given the opportunity for Make in India also, and for Atmanirbhar Bharat, which was playing a huge role for the small and medium-sized enterprises to come ahead. You had Atal Incubation Center funding so many small scale startups, right? So the next question is for you, Mikhail. So in a general perspective, how has the startup sector in India benefited during the pandemic, and which sectors within the startup genre have benefited most in the last year? since the pandemic?
So there's this book by Nassim Nicholas Taleb, and it's called Anti-Fragile. So the notion is that organizations should thrive in the face of shocks, stressors, disorder, and volatility. So that's the idea of being an anti-fragile company. So this pandemic was a great litmus test to whether a startup is resilient or whether it's anti-fragile when there's so much disruption that they're experiencing. So some people may see it as a boon, some people may see it as a bane, but this pandemic has basically forced the startup sector to recalibrate, to redefine, to retool what their business is. So the entire DNA of startups, they have to be changed from the ground up, with the goal being that you don't have to just survive, but to thrive. So there's a wave of digitization that's going on. So these startups had to acclimate, and they had to also unwittingly become more connected to their consumer base online. And this became more feasible in the course of the pandemic. So what would have taken maybe 5, 10, or even 15 years to adopt, it happened in the span of 18 months. That's how long the pandemic has been around this time, right? So even those who were, they didn't want to go digital, they were a bit reluctant to go digital, they were forced to relearn, and they had to adapt to new media. And one interesting idea I thought of is that, in the course of the pandemic, all work has become from home. It's become teleworking. So startups essentially can receive broader talent because your restraint prior to the pandemic is geographical. Like, I have to be near the office to work for you, right? So right now, if I were a startup, I can get the best talent across the country because it's all from home. So someone who's in Kerala can hire someone from Maharashtra without much of a pitch. So the sample of talent is much bigger. So there's more talent acquisition in quality. So that also improves. So that I feel is a major win that I would say is a benefit of the pandemic to startups. And even with this whole digital model happening, people are becoming more financially literate. But I don't think it's a percentage that's big enough, but it's a start, right? So people are participating in this whole capital market ecosystem. So, which is really good for startups because now you have more demat accounts coming up. There's a statistic that it shows that it's really large compared to before. I know people who have got allotments for IPOs and they've never participated in the capital market ecosystem. So it's really good for startups. And it's a really great time for first-time investors. Even the stock market is going really robust because even startups in this, I'd say it's a bull market. So they're getting premium listings, they're having greater subscriptions. Even if you're a loss-making company like Zomato, you're doing really, really well. So I think it's a definite impetus. And there's also a level of FOMO, which is the fear of missing out. So looking at the success that other people are having, there's more availability of capital for startups. So there's buying more, there's ordering more, there's searching more because people are home. And the market is kind enough to oblige. So if your startup is resilient and if your startup is anti-fragile, they can meet this unprecedented demand. And so based on all these things I've just said, in my opinion, sectors doing really well is like the digital healthcare sector and the education technology sector, the edtech sector, because there's better digital infrastructure, there's easier access, both urban and rural areas. They can consolidate their respective markets easier. There's obviously a lot of demand for both of these two things. And there are mechanisms for online supply chains, which have compromised a lot during the pandemic, but it's doing really well right now. Only sad thing is, it took a pandemic for it to happen. That's the only downside, I'd say, but there's a lot of benefit to the startup sector.
So true. You give so many perspectives here. Yes, Varad, I'll definitely let you speak. Just two factors that I would like to pitch in here. So initially, he mentioned about digitization being the most important for startups during the pandemic. So eventually, any startup coming these days has two main types of sectors that they're catering to. One is their respective sectors such as fintech or edtech, etc. And second, they have this terminology called SaaS, software as a service, that has been specialized and that has been promoted so much that startups are going towards that, building on that term to get enough funding, because that is what is disruptive today. Technology is making every startup sector disruptive. And second, we see the response towards human resource. Startups have made themselves so competitive that they are catering towards the employees. Zomato also, before they launched their IPO, had already told their employees that the top tier management will be getting ESOPs. But yes, the startup sector has made it really competitive. People, they're catering to the people. Even in the placement cells in colleges, we have specialized listing for startups because they may not be able to provide enough stipend for them immediately, but the growth that you can see in the startups is pretty fast. Within 6 to 8 months, you can make junior manager or a senior management there, because it's a new startup. With all these points, you can move towards a very interesting aspect, right? Or the next question for you, Varad, here is there are so many angel investors and venture capitalist firms who are looking forward to invest in and invest in very interesting and innovative disruptive startups, right? There have been like almost more than 20 unicorns in 2021 itself. Like last year, if you see, in 6 to 8 months, you had only 2 IPOs being launched, and right now there are almost 8 to 10 IPOs coming here. We have Nika, we have Paytm, we have LIC coming up. Startups as well as the other companies, so that it remains competitive for the older companies too. That's very interesting. So, how are these investors, very important? How are they so cash rich today that they are so risk free and just going ahead and investing in ideas more than established startups here? What do you think?
So for this, I will take our audience through the whole process from from the macroeconomic perspective as to how the people get money and how this money get transferred to capital markets or to these investment bankers, and then why currently so much of money has been poured by them into the startup industry. So for that, currently, the scenario we are sitting in October 2021, we have seen the quarter 2 results have currently been announced in India. And if you see, the festive season is heading ahead. We are about to reach Diwali in India. And if we talk in global perspective, we are heading towards Christmas. Historically, this season has been seen as the period of boom in the economies, except the 2008 crisis and all such major economic crises have turned up. In these kind of economic scenarios, we have seen that the money in the hands of people, the common people of any nation, goes on increasing. And the peculiar fact about the current situation is that the central banks across the globe have slashed their interest rates to the record low levels. Going forward, I would say that the whole structure of the economies have been brought to turn around. I would say that 2 years back, we would have not imagined that electrification of vehicles would come so fast in the economy. We didn't imagine the the digitization of all the daily activities would turn up so rapidly. But due to the pandemic, the entire structure of our society is at a change. So that's the fact I was trying to reiterate, that other asset classes have become so expensive for the investors to afford their funds for the long run. In these terms, the cash or the kind of money they're having will be automatically poured into the capital markets. And currently, the pace at which we have seen the markets growing recently has created a FOMO, as Mikhail said, so that all the people who have money in their hands want their money to go to the asset class which is more favorable for them. So this is what happens, and then the money which people have gets into the hands of these investment bankers, which have so many smart portfolio managers and fund managers kind of thing, and eventually this gets into the capital market. So the current boom, or as you said, the why investment bankers or venture capitalists are so rich, it is because the economic scenario which has out of a blue moon formed, and that's the only reason I believe which has made the venture capitalists so cash rich. And I would also say that in some countries the interest rates have gone to negative. That is, you have to afford a cost, you have to bear a cost to keep your funds with the banks. So that's the basic thing. Recently I visited a commercial bank, and I was surprised to see that the bank was offering a rate of 5.13% on the fixed deposit for the term of 1 year. That's very surprising, where people are earning 5% on a daily basis in the market, in the derivative segment of NSE, and people are earning huge cash. So this is the kind of shift, the mental shift that the generation is having currently towards the market, and that is something which is pushing, which is backing all the rally.
That is right. You give a good perspective as how exactly it's a bullish market first. Second, how exactly the funds is not only financial concepts, a psychological concept where it's unsaturated. The market is getting unsaturated. There's more funds coming in here. For this question, I would also like to take the perspective of Mikhail, because since he's been researching on venture capital firms and these sectors, that he might have a few more points to add.
Well, I think it does seem like that, but I'm trying to figure out how is it, if it's just FOMO and the availability of capital has been so much, then how long lasting will this be? Because at a certain point of time, I'm assuming that investors will think, to this new age tech companies that have come across, what if the exit valuations not as high? So it may not just be about being cash rich. It's also about trying to allocate more money into the market, thinking there'll be a lot of returns that you could possibly get. Even when startups are not necessarily ready to go all the way, they just feel like, okay, everyone's doing it. That means I also may have that level of success. So I feel that also may be a worry. But in terms of being cash rich, I also feel another issue is there will be a point of time maybe when investors have either had enough, or they think, okay, I don't think at this point of time beyond the pandemic, post the pandemic, hopefully when that phase comes, that the growth that is induced through the pandemic will stay. Or another point is there's a lot of greed. I'm using greed in a positive connotation, not negative connotation, that they want more. And when that pandemic induced growth does not sustain, that they'll end up putting in more money than they get than they get back. So that's a worry that I feel would be predominant later on.
Yes, that's particularly about the kind of correction that I feel the markets are going to have
Correct.
in the current phase. As we see, Nifty has become adult; it has crossed 18, and Sensex has become a senior citizen, that it has crossed 60,000 mark. And recently, the valuations which the companies are having are kind of not justifiable for the price earnings they are having. Recently, we have seen the stocks of IRCTC, we have seen stocks of, DMart, and then Reliance, which have been so much pumped up with the cash, and the foreign institutional investors have been pouring money into the Indian markets. That confidence, that investors' confidence, is being backed by the central banks and government. But at the same time, I feel that in recent terms, when the slack period starts between January to May or June month, the rally might be coming at a pause.
Interesting, perspective that you brought forward. It was a cautious, but we also see why exactly we're having that funds coming in, not only from the Indian investors, from outside too. It's a huge investor boost, which is leading to the government's boost and the RBI's boost to give more inflow of money into the economy, basically. All right, so just moving on from there, coming to another aspect of IPOs, since that is the main aspect of what you're covering in this topic. So now, since we are seeing so many investment firms trying to invest in startups, this question is for you. Do startups necessarily have to launch an IPO? Because the main perspective of launching an IPO is to gather public fund and expand themselves in the country. But right now, the amount of investments that you're getting from different investors and firms, you really do not require IPOs to establish yourself far and wide. You can go even international before you launch an IPO. So is it a personal choice, or do you think there is some benefit for startups to launch an IPO, become public? What do you think?
To basically address your question, going public is also a choice and a matter of publicity which the startup can earn in the long run. Recently, we have seen the IPO of Zomato, the kind of success it made in the markets. It was a blockbuster IPO. The stocks of the Zomato were trading at the higher premium than that it would have got in the gray markets also. And the rally will continue for some days. Now, as you said, the opinion to go public has two aspects. I will qualify my opinion to abruptly. I won't say abruptly that yes, it is good to go public and it is good for their founders. it has two, I can say, it has two sides which we have to understand. If the company or a startup goes public, it has majorly two advantages. The stake which the startup has gets diversified into the public, and the public is the source of funds which does not, leave uh, the capital allocation as fast as FIIs and DIs do. Recently we have seen that in case of IRCTC example, when the IPO came, the percentage of foreign institutional investors and domestic institutions having the funds was, the percentage of shareholding was much more, and as the period went ahead, the public holding was growing in the firm. So what confidence it gives to the public is what matters for the startup in its initial days. And to add more, it automatically gives a kind of publicity also. And qualifying my opinion, my other side of opinion is that if the startup goes public, I would say that, coming from a compliance background, I would say that compliance rises significantly once the company goes public. You have to do quarterly limited reviews. You have to, follow stringent compliance deadlines. Then it becomes difficult for the startup to focus on its core business activities. And current compliance environment is such that you have to particularly focus more on your compliance aspects also. So that's something which I feel that startup should not be doing at its initial stage. Now it depends on the mentality of its founders to go for the IPO or not. And one more side is that the stake gets diluted. Obviously, you would never like the stake of your company to be distributed among at least public. So even if it grows on a future date, the gains would be accruing to your personal account, and which is bootstrapping basically. The startups are being funded by their own founders only. So these two sides are there for the, I would say, uh, going public on a startup. Yeah.
That is
Also,
right.
if I could add something, sorry. Also,
Sure.
the as Varad mentioned, the compliance aspect. There's also this new system called ESG, which is environmental social governance. I don't know what the status of it is in India properly, but that's a standard, additional standard that you have to go through when you're an IPO, and that's something that I feel is a major issue, as Varad mentioned, and that level of scrutiny that comes. It is way too much for something that's a startup. As Varad mentioned, it's a fledgling company. So, when that much company information has been made public, that much data has been made public. So everyone from the management and the board members, there are much higher standards and, public scrutiny and reporting that they have to go through. So that's a certain level of infringement, I would say. I don't know if that's the correct word in this case. Infringement of what you consider to be your own company, opening it to the public. That's one thing that you should really be prepared for. And that also, I feel, is a sign of a company or a startup that is anti-fragile, because due to that much overturn and that much shock, it is something that's to be desired. Yeah.
That is right. The ESG concept actually is getting pretty popular because, first of all, the government has not mandated but made it popularized among startups as well as companies to comply to it through corporate governance policies and through CSR activities. That is one. And second, even banks have given a good hold for companies by opening ESG funds, ESG mutual funds, wherein the company's responsibility towards it is just shared. They give the funds to the banks and they allocate to these respective other companies' social aspects and comply to the ESG norms, which is required.
Basically, ESG is a standard formed by Morgan Stanley in recent days, and currently we
Right.
have seen that they have removed Vedanta Group from their Morgan Stanley investment index due to the
Right.
it does not suit in the ESG segment. So that's something we are going to see as interesting as to how startups shape the Indian economy in terms of ESG criteria. So that's going to be really interesting.
That's definitely an interesting topic. That and corporate governance compliance by startups, because right now they're just going towards the greed for rising faster in the economy rather than having that proper corporate governance set and those principles set, which is more stricter for large cap companies and a little bit for mid cap companies right now who are listed. But anyways, that's a topic for to discuss later on. We can conclude this with one last question for you, Mikhail.
Sure.
Very careful question, since we cannot always end on a positive note. We can not always show a bright side of the startup sector right now. So, how long do you think the IPO autumn, if I can quote in that sense, will last? Because most of these startups are now following the trend, since the economy is capital rich. This is going ahead and trying to get as much funds as possible. So, what are the possible risks that this hyped up startup sector can face in the next few months? What do you think?
Right. I don't think it's ending on a negative note. I think it's a perfect balance because we've praised it a lot. I think we might as well talk about a few negative parts of it. So it's always about assuming the best and preparing for the worst. Because when things go as well as they have been in this past 1.5 years, I assume it's going to be a bubble. And for financial markets, it has been a bust and boom era. So the issue that is there is that markets that we have currently today, that they're so enthusiastic, it could potentially overshoot the value and the price of these IPOs. So that is a major risk and a major concern, because these new generation tech companies are coming up. There's a lot of enthusiasm to be part of it. As we've used the word throughout this panel discussion, FOMO is there. So there might be something called buyer beware. Like there could be possibly regret in the future that I've done this. So that is one major risk. But there's also an interesting term I came across maybe a year ago, called capital foie gras. So foie gras basically is when you force feed ducks and geese and they get the liver really fatty and all that. People eat that. It's just like a French culinary thing. So capital foie gras basically means is that the company is fed too much. It's injected with too much capital. So it ends up suffocating itself. So we have like this VC model that's completely gone, as you mentioned. We don't know what's happening anymore, just gone crazy. So these high valuations for like these new companies, that means these companies are facing a lot of pressure because they have to grow much earlier, they have to grow much faster, and they are coerced to raise much higher levels of funding for them to meet these milestones. So this availability and overabundance of capital is going to pose a serious risk for these startups, because around 20 years ago, there was something similar called a dot-com bubble. I think this is 2000, 2001.
Exactly.
Right.
Yes.
So this could potentially be the start of something like that. Like it's a sense of deja vu. People who, I wasn't there really, I was 1 year old. I guess you guys were just born as well. But that is something that people are really fearing. And it's very much possible in India because we are just starting to become that much more financially literate. So I don't want this to hurt people. So basically you have to, as an armchair perspective, I don't have a startup, but you need to figure out the right amount of funding. You need to have realistic milestones for your startups. And for the people who are going and participating in this capital market ecosystem, you need to do your research, because your FOMO might adulterate your financial well-being later on. So hopefully, post-pandemic, this interest in the stock market is here to stay. It's not pandemic-induced growth. So exit valuations have been very high if you see what's happening. So let's hope it persists post the pandemic. And that's an anti-fragile startup.
The startup culture has so much pressure to utilize its funds in best possible way, to make use of these funds in such a way that their shareholders get maximum benefit out of it. The kind of work culture that has formed around the industry, that has become so toxic, and we can see that from recent posts which we have been seeing on the social media as well. So that's a kind of topic we can actually plan someday else to discuss on.
Definitely. Great points brought forward. Great, the warning sign even for startups right now. This may be a very positive market, but it always hurts if you're not careful. So always plan every single move that you have, especially when it is related to money. So perfect note. So thank you so much, guys, for being a part of this session. And all our viewers, if you like this video, please put a like, please subscribe to our channel, please share this with your friends, and we look forward to more such sessions. And please keep following us. Thank you.